Imagine having the opportunity to hit the reset button and start your day trading journey all over again. What would you do differently this time? What crucial mistakes would you avoid, and what tools would you leverage for a successful trading career? Today, we're diving deep into that hypothetical scenario, offering you a second chance to master the art of day trading. Welcome back, traders and aspiring traders, to another exciting episode on our channel. In this video, we're going to explore a topic that's often overlooked but holds immense importance for both novice and experienced traders alike. We'll discuss what we would do if we had the chance to rewind the clock and start our day trading journey from scratch. So if you're coming with some experience, or you have zero trading experience, this video is going to be a boiled-down checklist of all the most important things that you need to focus on to set yourself up for success. We'll not only address the common mistakes that affect new traders, but also provide valuable insights on how to avoid these pitfalls, ensuring a smoother and more profitable path ahead. Additionally, we'll explore more on the indispensable role of the right tools and resources in shaping a successful trading career. Also, we're going to share with you how to access capital, starting with a small amount of money to be able to take big positions, and I'm going to show you tips and tricks along the way. So, whether you're just beginning your day trading adventure, or you're a seasoned pro looking for some fresh perspective, by the end of this video, you're going to have a clear-cut path to start your day trading career without wasting unnecessary time and money. Before we start, make sure you hit the like button on the video. Subscribe to our channel if you like trading and investing. But that's not all. Take a look at the video description below. I've left you a treasure trove of resources, including links to top-notch strategies for Forex and crypto trading, info on our thriving trading community, and more to fuel your trading adventures. But here's the deal. If you ever have questions or need assistance along the way, don't hesitate to drop a comment below. Our team is here to support you. Now let's dive into creating your new trading journey masterpiece. So in order to figure out what we should be focusing on as a beginner trader or someone who needs to revamp their trading, we first need to identify what we shouldn't be focusing on. And I'm going to identify a common trap that most beginner traders run into that will basically halt your progress and basically put you into what I call the spin cycle. Okay, so let's talk about that trap and how to avoid it. So when people first start trading, the first thing that they're going to do typically is get onto an exchange. Maybe try to find a pattern online and start trading it. Most of the time, because you don't know the risk implied, you're actually able to be braver than most people, and you're probably going to make some money off the jump and think, wow, I'm actually getting really good at this whole trading thing. I should continue doing this, maybe with more money. Okay, the next phase is going to be when you take a position, and all of a sudden, it goes dramatically against you. And you're like, oh wow, I'm down a lot of money. I can't sell this position because I don't want to realize a loss. Okay. So you end up waiting for the position to come back, the position comes back to your entry, you take some profit off, and you reinforce that idea that says, oh, all I have to do is wait on my position if it's going against me, it will come back. And you'll be able to make money and not realize a loss. So you'll carry that psychology forward until phase 3, which is what I call a catastrophic loss. This is when the position goes against you. You deploy the same tactic of holding that position, but then the trade doesn't turn around back in your favor. And the loss is so significant that you're forced to take a huge chunk out of your account. This is where beginners go into the discovery phase, where they think that they need to acquire all sorts of new information. And this is where the trap starts. If you don't understand trading and you fall down this trap, it's going to be very hard for you to recover without switching your mindset and how that psychology is actually wrong. Okay, the intuition that makes you successful in normal life deployed in trading will actually make you the worst trader in the world, which is why roughly 90% of traders fail because they can't rewire their mindset. So let's get into the math behind trading. It's really simple once you understand it. Okay, so when we're talking about trading, it comes down to two basic statistics: average risk-reward and average winning percentage. So how many times are you winning trades versus losing trades? And how much money are you making on the trades that you do win versus how much you're risking on the trade? That's going to be your risk-reward calculation. So let's pull up a calculator so that we can see this actual concept in action. And then I'm going to show it to you on a chart so that we can understand how this works. So say we have a $500 account and we're risking 1% of our account per trade. And we have a 1 to 2.5 risk reward, meaning if we're risking $100 in the trade, we're making $250. When we're winning the trade, and let's say our winning percentage, let's say it's 35%. 35% is pretty low, but as you understand the stats, you're going to realize that it actually doesn't matter too much. Okay, so starting with a $500 account over 100 trades, right? With these statistics being wrong, 65% of the time, we've increased our account by 52%. This is why you need to understand these stats. It has nothing to do with being right all the time. It all comes down to the math behind this. So let's understand risk factors. Let's say that we wanted to take a position in the market right at this level. If we are wrong, and the market continues to push down into this level here, this is going to be our 1 unit of risk. Meaning, if this trade comes up and hits this level, we're going to be making 3 risk factors, which is going to give us a $300 profit if we're risking $100. That's what we mean by risk reward. So we know that this can happen 35% of the time. We can be wrong 65% of the time and still grow our accounts by 52%. As humans, we're wired from children to be taught that being wrong and losing money are 2 behaviors that need to be corrected. What we teach to our VIP students is the fact that when you're taking trades, the risk that you're putting on the table, as long as it's uniform and contained, is simply opportunity cost to get into the market to be able to exploit this exact edge. As you become a better trader, say your 50% win rate, so you're right about your trades half the time, look at the profit potential that you can make even on a small account. And something that I always emphasize with our VIP members is the fact that it's really about generating a consistent process with a small amount of money. If we can make 131% with a $500 account, I'm going to show you this a little bit later in the video. But with leverage, we're going to be able to use $50,000 pretty easily, starting with a $500 account, right? So if we're confident in our process, and we run this calculation over 100 trades, you can profit $115,000. So say we're taking 100 trades over that period, say we can take 2 trades a day, that's going to be 50 days. So if we divide that over 50 days, if we're following the stats, we're averaging $2,300 per trade. And this is the exact concept that I deploy when I'm able to make $2, $3, $4, $1,000 on each trade that I'm taking. It's about mastering a small process and then figuring out how to scale that so that you're following the same system with larger numbers. Okay, so let's go over finding a setup where we think the market is going to make a move. Let's talk about positioning ourselves so that we have a uniform risk when we're doing that, so that we can keep our risk-reward static. Okay, the software that I'm using is called TradingView. We have a video on how to use TradingView. I can put the link in the description of this video if you're not already using it. But basically, it's a very clean cut. And with my main style of trading, I'm really not using any indicators. So there are areas on the chart where I can identify where we're probably going to get reversals in the market, which are going to allow me to be able to use that risk reward and winning percentage, and put myself in that high probability situations to get the reward that I want. Okay. So what I'm doing here is using Fibonacci analysis to be able to figure out where the tops of markets are going to be. You can see 0.618 is the exact top there. This is a process called a golden zone. I have plenty of videos on this that you can watch afterward. I'm not going to go into the details. I'm just going to kind of walk through what I'm doing to show you that it does work. Okay, so then, after taking a Fibonacci retracement off of this level here into this level, and then we're going to be taking a short position off of here. So I can basically set up my position so that now I'll be figuring out how much profit I can be able to make and where I need to position myself to be able to take the proper size and position. So in this situation, we're going to be making a 2.36 risk-reward ratio, which means that if we risk $100 on this, we're making $236 on the trade. So the next thing that we're going to do is figure out how to position size into this, how much money it's going to take, how many units we need to look at. So this is where we're going to go into an exchange. We use Bybit, by the way. We've been using Bybit for a long time because of its great features, and it is a kind of more beginner-friendly, and it has all the leverage capability and coin selection that we need to take these types of trades. I'm going to put the link to Bybit in the description for you guys. They have up to a $30,000 welcome bonus for new users when you use the link in the video description. If our entry level is going to be at 0.6317, our quantity is going to be, let's say we are shorting 5,000 units of XRP. Once you put that here, that's going to automatically configure the value of units and the cost we need to use on this trade. So we can see if we're able to enter with 5,000 XRP, we are risking $140 on the trade to make $330 in potential profit using $2,831. Now you might be saying $2,800 is a lot of money to be using in a position. I don't have that type of money. That's exactly why crypto trading is beautiful, because we have leveraged exchanges like Bybit, which allows us to keep the same dollar amount of risk, but use way more money with the position so that we don't need to use that much of our own capital to take these trades and be able to accelerate our trading process. I'm going to show you exactly how that works. Okay, now all we have to do is go over, pull up our trade calculator here and input all of our orders. Okay, so we can put our position quantity here, which is 5,000, with our entry price at 0.6317. Our closing price, or take profit, at 0.5930 here. If we're going to go with 1x leverage, that is no leverage at all. Okay, it is going to show us that $158 is required for the position. But if we change the amount of leverage that we can use on the trade, so if I increase this to 20x leverage, we're essentially dividing the capital requirement on the position by 20. We can see now this position went from costing us $158 to costing us $157. So we could probably use 75x leverage. Okay, so if I wanted to increase this to 75, this is only going to cost me $42 to take this position, and my potential profit is the same, and my risk is still the same. Okay, so that's how you're going to position size, and that's how you can let your edge shine through. Well, there you have it, traders. We've just delved into the intricate world of day trading, uncovering the traps that could set you on a path to the dreaded spin cycle. Avoiding these pitfalls is crucial for anyone looking to master the art of day trading. Remember, it's not about being right all the time. It's about understanding the math behind trading. The average risk-reward and winning percentage are the key statistics to focus on. With the right approach, even a 35% winning percentage can lead to substantial growth in your trading account. As we've demonstrated with a $500 account, mastering a consistent process can yield impressive results. And the beauty of crypto trading lies in leverage, allowing you to maximize your potential profits without tying up significant amounts of your own capital. If you're ready to take your day trading journey to the next level, make sure to check out the resources in the video description. We've left you links to top-notch strategies, information on our thriving trading community, and more. Before you go, don't forget to hit the like button, subscribe to our channel for more trading insights, and ring that notification bell to stay updated. If you have questions or need assistance, drop a comment below. Our team is here to support you on your trading adventure. Happy trading, and may the markets be ever in your favor.